Good afternoon, everyone. Today I'm having a conversation with Peter Krauth. In today's conversation, we get into the Canadian budget and the idea that many Canadians have that the government can just pay for everything. We also get into the silver and gold market, where it could be heading. And Peter talks to us about how he's thinking about his portfolio playing the junior markets and what are the things we should be thinking about. All right, everybody, enjoy the conversation. Peter, it's great to see you again.
Steve, always a pleasure. Glad to be back.
So, I know you're Canadian based, and so am I. And I have to bring up the budget to start off with here. I'm sure you followed that at least to some extent. We've now reached the point, Peter, where the Canadian government is spending more on interest payments than they are on health care. And we've got this prime minister. He came along, he said that the austerity was going to be a big part of what he was going to do. And then we get this budget, and it turns out that he's not only like the last guy, but he's actually a lot worse. I'm curious here. What are your thoughts on the budget, and what does it mean for us as a country and as an economy?
Well, I mean, you're right. I have been following it. I haven't been following it in depth, but um, I mean, I have been hearing that uh, there's going to be so much spending that we're going to have these new record deficits. We're pushing to higher percentages of versus our GDP, and some people I think just sort of not understanding or blindly or whatever are saying, oh, this is good, we're investing for our kids, we're investing for the next generation, and they clearly don't get it. They clearly don't get it. This is not helpful. This is pretty much, I think, the same as you're going to see across the rest of the G7 and well beyond, and they don't know how to do anything else except spend. um, they don't know how to generate value. They don't know how to cut. And I'm not surprised that we're seeing a lot more pushback and that they're having trouble selling it, and not getting other members from other parties that are going to need to support it to get this through, and that we could very well be facing another election and over this. And so, what a shame, what a waste. But here we are once again.
It seems to me like, I'm 42. I live in the Toronto area. So and I just want to frame that for anybody who's trying to understand sort of what my socioeconomic circle might look like. And it seems to me like the conversations I have with people my age, whether I'm playing a baseball game, or I'm at a party, or I'm talking with family and friends, the sentiment here in the GTA tends to be that the government can basically pay for everything. I struggle with how anybody would choose to work in the private sector over the public sector, when you consider the pension and the job security and the, hey, I don't got to worry about how I'm going to put food on the table next month because I just have this money magically deposited into my account each month. And I just wonder if we're at a point now. My buddy who's a fund manager made this joke to me the other day. He goes, "We need a breaking point," and he goes, "It's when that guy who gets paid to work for the provincial or federal government to write reports that nobody reads, when he starts begging mining companies to hand him a shovel and start digging for minerals in the ground just so he could feed his family. That's when we will hit that breaking point."
Yeah.
And I'm curious here, do you think that this is just something that it's just going to, the standard of living here in Canada is just going to get progressively worse and worse and worse? And it's just going to be something like, like the boiling frog, as they say?
Right.
Or do you think that we're going to hit that sort of, oh crap moment where we wake up one morning and our world has changed?
Um, I think there's a ways to go before we hit that oh crap moment, but yes, we are the boiling frogs, and sadly enough, and it and you're right. I think the mindset is that people just think that, sure, there's this huge bucket, and we can just keep dipping into it and keep grabbing and getting what we need, and you know. People, I think, can sense that things are wrong, but they can't quite put their finger on it. And I was listening to actually Peter Schiff in an interview a little earlier, and he was explaining that people don't grasp even what inflation is, and they're being sold the idea that inflation is really prices going higher. But if you look at a definition, it's not. It's money supply being inflated, because you can't, like he says, you cannot inflate prices. But you can inflate money supply. Well, whose fault is inflating the money supply, and whose fault are higher prices? Well, the higher prices are those so-called greedy companies and service providers that are really having no choice but to pay more for their supplies, for their labor, and have to pass it on. And so, and yet, being told that they are the problem deflects responsibility. And so that's what but people don't grasp really what inflation is well enough. I think that they do think that that's the problem, is that you just have these big companies, or even small companies, going along and just being greedy, pushing their prices up, not thinking, because really it doesn't, frankly, think about it, Steve, it doesn't take much to realize that they have their own costs. They have, a trucking company has to pay for fuel. They have to pay to rent trucks. They have to pay higher wages. All this stuff gets passed on. They have to pay higher rent for their offices. It all gets passed on, and they're just taking inputs that are going higher, and pushing them through their own accounting, and ending up having to pass those costs on, because they're not going to work for free. None of us will. None of us wants to. So we are getting to that moment, unfortunately, but I think it's a ways off. When it comes, it's going to be pretty lousy.
Do you think that what we've seen here over the last year in the rise in the price in gold, in the rise in the price in silver, is an indication that inflation is coming in a big way? And I know that we had a little bit of a scare there back in, I guess it was 2023, where suddenly interest rates got jacked back up because inflation started to rear its head. And I actually think that the central banks were late attacking that, and then probably late on the way down. But that was preceded with the run in gold. I mean, gold basically ran from like during COVID, it ran from like 1300 to like 20 to a high of 2100, and then sure enough, a few years later, we get hit with the inflation. Do you think what we're seeing right now could be a signal flare for inflation that's about to hit us again?
Most definitely. So there are two things that I want to say here. If you look at a chart of inflation in the 70s, we had three waves. One that started in the late 60s, went up, and then they raised rates, so that kind of pushed it back down. But each wave had a successively higher low. So we never got back down to previous inflation levels. And then we started up on a new wave upwards. And each wave upwards brought on a new high in inflation levels. So I think that's the kind of scenario that we're heading for. The other thing I think that, especially if you look at sort of the last maybe 5-6 months in the gold and silver prices, I believe both metals were sniffing out what was coming. And what was coming was, frankly, something that we pretty much, I think, expected, because central banks, and the Fed in particular, wants to avoid surprises and tries to signal as much as they can in advance that we were going to get a return to the or a reigniting of the rate cutting cycle. So they started last year in September. They stopped, I think it was January or February, when this whole tariff thing hit, and there were more uncertainties and whatever. So they wanted to kind of take their foot off the brake a little bit. But then they started back again not long ago. And my sense is that gold and silver sniffed that out months before and knew it was coming. And I've been saying for about a year and a half, that when you start to see central banks cut in the face of high and rising inflation, it's game over. That's when, precious metals in particular will take off, because that market knows that they've caved. They've made a choice. The Fed in particular, has to choose: are we going to sacrifice the economy, raising rates, or are we going to sacrifice, standards of living and lower rates in the face of inflation? So they they basically said we're going to cut favor the economy, favor employment, and well, let people deal with higher prices. Through expansion by keeping the monetary expansion by keeping rates low. So that's what we're in now. And you can look back historically. Gold does extremely well when they start cutting rates, and then that goes on for 2 years, 3 years. Silver, and I've done the research, silver starts to do typically bottoms when they are halfway through that rate cutting cycle. I think part of it is because it's realistically seen as part industrial metal, but it has obviously a big inflation protection slash money component, and so there's that lag. But silver in the last three rate cutting cycles, if you look at how it performed on average from the middle of the rate cutting cycle, it was up 332% over the next sort of 12 to 6 months. It was phenomenal. So I'm not surprised to see it run like this. And frankly, by this time, within the next sort of year or two, to see a double from current prices would actually be an average of the last three rate cutting cycles. It would not be a surprise. So that has huge implications for silver, for silver stocks, mining stocks in general.
Does that mean that you're targeting a price on silver north of say $80?
Yeah, I am. I am.
So what's the way that you're playing the silver market? I view you as a bit of a specialist on silver. Are you playing it through the equity side? Are you trading the physical? Are you playing ETFs? What's your strategy there?
So the answer is yes, all of them, all of the above. In the newsletter, I cover the whole silver space. The one sort of area I don't really go to is the futures side of things, partly because of leverage and so on. But otherwise, I cover the whole space, and that's everything from these physically backed silver ETFs all the way down through. And then you've got the mining ETFs, you've got the junior mining ETFs, you've got the large royalty companies, the large producers, the mid-sized producers, developers, and then finally the explorers, and even some pre-discovery explorers. So the whole spectrum is covered. I was just looking at some reviewing some an interview that I did in February of last year, and a couple of things that I had said came to pass. One of them that was that we were going to see the larger caps um, react first in a rally. That started to happen last fall, especially. I said we were going to start to see M&A, which we did see in a significant way. First Majestic bought Gatos, Pan American bought Mag, and then Kerr Mining bought Silvercrest. So and then we've seen mergers. We've seen, for
And,
example, Silver.
and they bought New Gold yesterday. Sorry for
That's right.
interrupting you.
Exactly. Exactly. So they've gotten even bigger. And that didn't take very long. Well, so that's like in a little over a year, two huge acquisitions. Um, and then, another sort of smaller example, there are a few, but Silver 47 merged with Suma Silver, making what I believe is an excellent company. And so, this has come to pass. I think that we're going to start to see now sort of the moving down the food chain a little bit. We're going to start to see these mid-sized producers do really well. After that, some of the developers, and they finding silver and quality silver projects is tough in the best of times. And I think that as we see silver prices move up, they're going to get more aggressive with their acquisitions. They're going to be more willing to pay more. They may also start to buy lesser and lesser quality, but the faster, easier way is not to go out and find the stuff yourself. It's to pay for, existing deposits, especially if, that they're economic. So, that's what I see coming. I think this space will stay quite heated for quite some time.
Now, I'm not sure if you saw the announcement in going back to the budget, but Canada is starting what they're calling, and I'm not going to get the term correct, but it's some sort of sovereign uh, fund for critical minerals, where they're setting aside $2 billion to start to take equity stakes in companies that could be anywhere from, as I understand it, exploration all the way through to processing. You think that this is something that uh, makes sense? What's your thoughts on it?
So, wow. I mean, I don't think they should be involved in that side of it. I think they should stay out of it and relax some of the rules and let business do its thing. I'm not saying that exploration and mining should not be done responsibly. That's not where I'm going. But I think that I believe in letting the markets do their thing, and the market is a sum of millions and sometimes billions of decisions. How can a handful of paper pushers think that they know better? That's really my view on it. I think when you look at economic successes jurisdictionally, the ones that have done the best are the ones where they've lessened rules, they've stayed out of the way, and they've let business do its thing.
I think that the part of the problem with that is that in I think that they're getting it half right. And what I'm about to say is probably going to anger a lot of people in the audience. But I think you either, if you're going to do it, you got to go big or you don't bother. Case in point, the Canadian media can't shut up about lithium. It's every time they want to talk about critical minerals and green metals and that sort of thing, the CBC won't shut up about lithium. Now, lithium has a problem because in China, if the government wants a project to happen, it's going to happen. They've invested lots of money into companies or into projects around the world. They have the ability to process it, and they have end users to sell it to. So if they ultimately don't like the price that they're able to get outside of China, they can use it at home, and they often do. Now, we got a lithium processor in Thunder Bay. I'm not going to name the company, but I've probably already given away too much information. They were given $200 million from both the federal and provincial government, or at least they're supposed to. And my issue with that is that, okay, we're going to give them $200 million to go and build a processing facility. Now, what happens if the price of lithium is trading at $800 a ton and they're able to process it at 13? I don't know the exact numbers off the top of my head, but now what? So we've given them $200 million to go build a processing facility. Are they just going to start producing lithium at a loss? And so what I'm suggesting here is that if we want to actually dabble in a lot of these metals where China does manipulate the market, $2 billion isn't enough. It's going to take it might take $500 billion to get serious about it. And and even on that token, and I'm sorry that I'm ranting for a bit here, but I also look at the fact that Canada has no gold reserves left. And if we really wanted to rebuild the Bank of Canada's balance sheet with gold, if we thought that that was a good thing, then wouldn't it make just a whole heck of a lot of sense to just put together a fund, do a private public partnership, get a huge streaming deal on gold from some of these companies like Seabridge, uh, Goliath, some of these projects that haven't gone into production yet in places like the Golden Triangle. Wouldn't that make some sense? But that's not good. Like, you're not going to do that for a couple of $1 billion.
Well,
Seabridge's project is like, I think it's projected to take $8 billion to get started, US.
Steve,
So
that's an excellent idea. I think that's an absolutely excellent idea to create this fund. And if you can generate money for free by printing it, why not why not take it and leverage that up tremendously, like you say, by financing these fantastic large projects that will pay you a fantastic stream of royalty for God knows for decades. And geez, you should try and sell that idea. I mean, I don't know what kind of wall you're going to run into, but it's that would be tremendous. Maybe something like that is what is the way Canada is going to eventually, hopefully, look at rebuilding reserves, because rather than going out and just I mean, I'm not saying not to go out and just buy some physical, but to replenish it in a very sort of business like way. That is a tremendous way to do it.
Yeah, it's just mining is inherently really expensive, and the idea that we're just going to sprinkle a little bit of money in, and that's going to solve our problems. I'm sure it's going to help those companies that receive the funding, but then it kind of turns into this case where we're just like helping push a few companies along a little way
Right.
in their financing. But it's basically like somebody gets to play fund manager with a $2 billion fund, try to pick winners and losers that are like midway through their development cycle, and who knows how that plays out. So
Exactly.
I get I get your point.
And then people get cynical too because they think, well, hey, there, how come it's this company? There's all these other ones that are better quality, arguably, and then is there favoritism happening? So, these are some of the reasons that, like you say, go big or stay out of it, because you're just inviting, more criticism, more and more risk, and so on. It's, yeah, I mean, to your point about, this sort of lithium producer. Um, Again, that's one of the reasons that I suggest that they stay out of this stuff, because you're taking the risk with taxpayer money, right? Rather than letting the market decide what's best. And the market, isn't always perfect, but it's at least private capital that's being risked, right? And it does get it right on balance most of the time.
And it's funny, like they had the announcement for this particular company at PDAC,
Hmm.
and you had a whole bunch of Canadian MPs and provincial MPPs sitting there in their suits, so proud to do the press conference. The Canadian media shows up. It's all about, oh well, what about the Indigenous partnerships and
Right.
in clean mining and that sort of thing, and none of them know anything about anything. It and 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 I'm referring to the investment side of it.
Right.
None of them know anything about that.
Right.
Do as far as most of these MPs and MPPs are concerned, they know if lithium is something that goes into batteries, it goes into cars. It's a great headline. It makes them feel good. But did any of them go and read the feasibility study for the company? Do any of them know anything about the investment that they just made other than the fact that they would get to show up at a press conference and get their soapbox? And I honestly think that the answer to that is no.
Agreed, agreed, and that is part of the problem. It's accountability, and sadly, I'm not sure about there being much hope of changes to that part of the system. I am happy to see that we are seeing more and more willingness to support commodities. Part of it is because we know that we're deglobalizing, and that we don't have this. This ready access perhaps to resources that we used to prior to COVID, supply chain issues, all that sort of thing, and now geopolitical stresses and pressures around the world. So we're becoming more fractioned, and I think that's driving a lot of this mindset of being more self reliant, or being reliant at least on so-called friendly nations to ours. But it's just not the most sort of conducive to the most efficient way of doing things. And sadly, there's plenty of support for it too. So again, streamlining things, doing things responsibly, that way, we're seeing more of that. I'm very much for. But then getting involved directly, and especially in smaller companies, that to me is senseless. That's just sort of fraught with challenges, risks, perception, all of that.
The other thing I should probably bring up here in this conversation is what's happened recently with the juniors. I mean, we saw a lot of them were trading at all-time highs there just a month ago, and now they've all pulled back. I think that most juniors that I follow are down somewhere between 20 to 40% over the last month. Uh, what I believe has happened is, well, first off, obviously the price of gold and silver's come down from that previous high level, so that's not a good thing. But what I also think that has happened here, and this is something that I talk about quite a bit when I'm chatting with friends who invest money and we're trying to figure out strategically what we should be doing with allocating our capital, is that many of these companies at the time that they were hitting those highs announced financings.
Ah,
And it was just every day, every morning, you'd look and it'd be like, okay, there's like 20 financings, bought deals, no warrants. And then eventually we trickled down to, okay, they're no longer bought deals now. They're best effort financings with a full 5 year warrant. And you just sort of saw that cycle kind
yeah.
of work its way through. And I think that the big takeaway that I got from just sort of watching this round of the junior markets is that we have to be aware of the fact that when it gets really good, these companies are going to raise money. There's not actually a whole lot of real generalist funds out there that are investing in these things in their sticky money. It's mostly hedge funds who are going to hedge their positions and sell off, which is another way of saying they are going to take money from the retail investors who buy the stocks and they're going to give it to the companies to put on their balance sheet, and they're going to try to make a little bit of a profit while doing so. So I think that that's sort of my takeaway so far from seeing what feels like we're in the early stages of a bull market. But I'm curious, what have you learned over this last year, seeing this sort of junior mining renaissance come back?
So, I mean, I agree with the points that you made. What I would add is that um, I was a bit surprised that it took as long. I had been calling for a correction considerably earlier, maybe at least a couple of months earlier than it finally came, just because it just felt like it was getting too overheated. People were a little too giddy. It had gone. You started to look at charts, and they were starting to look parabolic, and so frankly, I'm glad that it finally came, because I think that we needed to digest these gains. And if you continue like this, then you're not going to have the bull market won't last too long, because you're just sucking too much money too quickly, and it's just not sustainable. But we've got the correction now. I think that's a good, healthy thing. Um, Besides that, geez, I mean, what have I learned? I've learned that when you're when you start relatively early in a bull, um, it does accelerate, because it starts to draw in more and more money. And remember, this even all took place when the general stocks have been doing significantly well. So it's even harder to attract capital at that point. And yet it came. So I would say that you started to have, what I think is, you did start to have some generalist investors come in. Um, I don't think that was anywhere close to what it will eventually be like. And I think that it was because you saw the metals run so much that naturally you get that leverage in the stocks, and people are looking for things that will provide that kind of alpha. And it came in the name of, especially the smaller stocks. Some of them ran earlier, some of them ran a bit later, but on balance, they did very well. I also think that this correction is not necessarily over. I think we are going to see some lower prices in the metals and in the equities. That's what I've been telling subscribers, and I think that we could be looking at uh, another month, perhaps a couple of months, before we see this finally bottom. That doesn't mean necessarily lower, but at least before we see it start to rise again. But you know potentially not see much lower than we have right now is also, I think, possible. I think that if you look at the kind of economic, uh, geopolitical environment that we're in, there are a lot of very good arguments you know, for support for these safe havens and these inflation, hedges, both of what gold and silver are. So I think that it's possible we'll see lower. If we don't, I won't be surprised by that either. I think that um, people are really cluing in, and they're buying the dips, so to speak, and waiting for those dips. So I think this is a pretty healthy bull market that we've triggered, probably going back to I think the bottom, if depending on how you look at it, was February of last year, right around the end of February. And silver was $22 at that time. We've run to 54. that is like 2.5 times. It's just tremendous. So and the fact that we went way beyond 50, which was the prior high, all-time high for 45 years. Um, yes, admittedly, we're below it now, not by a lot. But that we went above it and stayed above it for a matter of days, perhaps a week or two, to me is very meaningful. And I think that once we get back above 50, in a meaningful way, I think that it will start to act like a new floor.
All right. Well, Peter, thanks so much for hopping on here today. If our audience wants more of your commentary, where can they go to?
So, my newsletter is Silver Stock Investor. You go to silverstockinvestor.com. You can find out more there. I'm active on Twitter, Peter Krauth. You can go to LinkedIn as well. And our website is thegoldadvisor.com. And we have an amalgamation of different services and newsletters there. And you can see what we're all about and what might be a fit for you as a follower.
All right. Well, Peter, thanks as always for hopping on here, and let's do this again soon. Especially, hopefully, knock on wood, once we see the markets back up to those all-time highs.
Agreed. Sounds good. Looking forward to it, Steve.
All right, everybody. Thank you for watching. If you enjoyed this conversation, do me a favor. Smash that like button, subscribe, and ring that notification bell. Also, if you want more mining content, check out our website over at thedeepdive.ca.